So, hi guys, welcome back. So we have completed ESOP, we have completed buyback of shares. Let us see what next. The next topic is equity shares with the differential rights. Okay, so 5A, explain the conditions for equity shares with the differential rights under the company's share capital and debenture rules, which is theory. Very unlikely that this will be asked in the accounts exam, advanced accounting exam, but still they have given, you can just read that. 5B is the problem part. We'll see that. Okay. So who's there? Vrinda madam, can you read 5B please?
Yes, sir. L, M, N, and O hold equity capital in the proportion of 30:30:20:20 in Hill Limited.
Super.
X, Y, Z, and K hold preference share capital in the proportion of 40:30:20:10. You are required to identify the voting rights of shareholders in case of resolution of winding up of the company if the paid up capital of the company is 60 lakhs and preference share capital is 30 lakhs.
Same problem. Copy paste, copy paste, copy paste. We have done 3 times already. In ICA study material, one illustration is there, one example is there. Both of them we done same as it is, same model. There cannot be any other question also. Okay, from equity shares with the differential voting rights, if the question is coming, it should be this. Okay, so how to do that? You remember I have given you a very easy way to solve this. So first take shareholder, name of the shareholder. Okay, first equity or preference. First you give that weight for equity or preference, and then weight for shareholding. So weighted average weight. Weighted average. Okay, so what are the names? L, M, N, O. L, M, N, O. Then XYZK.
Yes, sir.
XYZK. So now you tell me equity preference weights how much? Equity is 60 lakhs, preference is 30 lakhs.
Yes, sir.
Weight bolo weight. Sir, my weight is 52 kilos, sir.
Yes, sir.
Not your weight, madam. Can I say equity is 2/3, preference is 1/3?
Yes, sir.
Total capital of the company is 90 lakhs, ma. Isn't it? Total capital of the company is 90 lakhs. In that equity 60 lakhs, preference 30. So the weights are 2/3, 1/3. Correct? 2/3. Oh, shit. Now they'll make my life miserable. How to write this? Ignore that point. It is 2/3. Okay, not that point 2/3. It is 2/3. Here it should be 0.1/3. Correct? Huh? It is 1/3. Yes. Ignore that point. Sir, if we are seeing that how to ignore, sir, hello, then we'll do one thing. Okay. I will convert it into white color so that you cannot see. Oh my God. Sir, you are seriously chartered accountant, sir. Thank you. If Bill Gates has brain, we also have brain, no? Sir, this is a fraud, sir. Yeah, I know. Okay, now tell me, what is the shareholding of LMNO, Brinda?
So 30:30:20:20.
30:30:20:20. So can I say 3/10, 3/10, 2/10, 2/10?
Yes, sir.
Yeah, no, 3/10 I'll write 0.3. Is that okay?
Yes, sir.
0.3. Again 0.3. 0.2. 0.2. This also we can write 0.66 and 0.33. But there will be that fractional difference, no? So tell me, what about XYZK? 40:30:20:10. 40:30:20:10. 10. That's all. Now they're combined, you need to combine both the parameters and then you need to look at the weight. You tell me 2 by 3 into 0.3. How much it will be? Oh, madam, answer bolo, madam. Answer bolo.
Sir, 0.2.
So 2 by 3 into 0.3. It is 0.2. Very good. Next.
0.2, sir.
0.2. Next. Should
So
be 0.13.
Yes, sir.
13.33% it is basically. This is 20%. This is also 20%. This is 13.33%. Can I say that?
Yes, sir.
Now 2 by 3 into 0.2. Again 13.33. Now 1 by 3 into 0.4. How much, ma? Again 13.33%. Huh?
Yes, sir.
1 by 3 into 0.3. It should be 10%.
Yes, sir.
1 by 3 into 0.2. Is it 6.67%?
Yes, sir.
1 by 3 into 0.1. Is it 3.33%?
Yes, sir.
If you add all this, it should be 100%. You understand? Guys,
Yes,
all
sir.
of you, please let me know in the chat box. All of you, did you understand this? Very good. So let us see how ICA solved it. This is the one. So did we get these answers, ma? L, M, N, O, X, Y, Z, K. So this 2 by 3, this 2 by 3, 2 by 3, 2 by 3, 2 by 3. For this 2 by 3 is equity weight. Then 1 by 3, 1 by 3, 1 by 3, 1 by 3. This is preference weight. Then 30 by 100, 30 by 100, 20 by 100, 20 by 100 is their shareholding weight. That is what. So we calculated in percentages. They have done in fractions. Both same. Okay. So guys, can I say that we are done with this and shall we move further? Hello. Can we move further? So we'll go to accounting standards. We'll come back to amalgamation and internal reconstruction later. We'll do amalgamation, internal reconstruction, consolidation also. These three are very important areas. Accounting standards are also very important area. We'll see. So many accounting standards will be there. Group 2 na. Okay. So accounting standard 4. I'll make you do a lot of work today. Okay. So Vrinda, read problem number 12.
T Limited closes its books of accounts every year on 31st March. The financial statements for the year ended 31st March 2020 are to be approved by the approving authority on 30th June 2020. During the first quarter of 2020-2021, the following events or transactions has taken place. The accountant of the company seeks your guidance for the following. T Limited has an inventory of 50 stitching machines costing rupees 5,500 per machine as on 31st March 2020. The company is expecting a heavy decline in the demand in the next year. The inventories are valued at cost or net realizable value, whichever is lower. During the month of April 2020, due to the fall in demand, the prices have gone down drastically. The company has sold 5 machines during April 2020 at a price of 4,000 per machine.
So all of you read this again. Very important. Read this again. Now recollect and tell me, events occurring after balance sheet date, accounting standard 4, we have two types of events, adjusting event, non-adjusting event. If you know that there is a significant fall in the net realizable value of inventory subsequent to the balance sheet date, will you consider that to be as an adjusting event, or is it a non-adjusting event? Guys, tell me. Very good. Correct. It should be adjusting event. Very good. I'm so happy. Okay, so what are you supposed to do? 50 machines into, you have, the cost of the machine is 5,500. 4,000 can be taken as the net realizable value, though it is available after the balance sheet date, since it is adjusting event. 1,500 per machine is the reduction fall, which is a loss. So 50 into 1,500, you will calculate how much it is. 50 into 1,500, is it 7,50,000? Whatever it is, that amount should be taken to P&L. So what will you do? You will write down inventory to their net realizable value. Okay, so cost of machine 5,500, net realizable value, even if it is available after the balance sheet, 4,000, whichever is lower, 4,000. Number of machines 50. 4,000 into 50 is, that goes to balance sheet, and 50 into 1,500, whatever the fall is there, that you take to P&L as a loss. So if you want to pass the journal entry, it should be P&L account debit to inventory account. All of you understand this? Hello? Guys, everybody understand this? Very good. Read the second one, ma.
A fire has broken out in the company.
Hello. Fire accident. Is it adjusting, non-adjusting? Fire accident, is it an adjusting event or non-adjusting event? Guys, all of you, tell me in the chat box. Very good. Sandeep, correct. It is a non-adjusting event. Okay. So you need to book the loss in the next year only. You cannot go back to the financial statements of the previous year. Okay. Read, ma.
A fire has broken out in the company's godown on 15th April 2020. The company has estimated a loss of 25 lakhs, of which 75% is recoverable from the insurance company. Okay, so you can recognize 25 lakhs loss with a receivable of 18.75 lakhs if it is virtually certain. If it is not virtually certain, it becomes contingent asset. See, all of you, there is a loss of 25 lakhs, okay? There is a loss of 25 lakhs. There is a fire accident and the stock got destroyed. 25 lakhs loss. Now you know that insurance company will pay 17.5 to you. But hold on for a second. Did you communicate it with insurance authorities? Have they visited your premises? Have they approved the loss? Have they accepted your claim? You lodged the claim. Have they accepted it? Have they given in writing that 75% we are going to pay? If that is the case, then you can recognize 18.75 as receivable. You understand? Okay. So that is this case. That is this case. And also here, you have to show it as extraordinary item, because fire accident is extraordinary item. Okay, that is about second point. Third point. Sir. Read third point, ma.
Sir.
Tell me, Sandeep.
Sir, but when it is a non-adjusting event, there is no adjustment required in the current year, right?
On 31st balance sheet, no, not required.
Okay.
On 31st, not required. Even on 15th, whatever you are writing, you need to write 25 lakhs loss with 18.75 receivable.
Okay, sir.
You will not go back to 31st March. Correct. Whatever you said is absolutely right.
Okay, sir.
Okay.
A suit against the company's advertisement was filed by a party on 10th April 2020, 10 days after the year, and claiming damages of rupees 20 lakhs.
Super. Put a star mark. ICA is becoming so dynamic nowadays. Suit filed on 10th April. Oh, and we are in 2020-21. That means this is not 10th April after closing balance sheet date. It is 10th April after opening the accounting year. Our accounting year is 2020-2021, correct? 10th April 2020. That means opening. So this case on the balance sheet, this case is there for 355 days. Seriously. What kind of questions they are giving? Better kill students, no? A suit against the company's advertisement was filed by a party on 10th April 2020, 10 days after the year end. 10 days after commencement of the year they should give, or make this 2021. Dear ICA, what you want? Hello, Vrinda madam, what to do to this?
Sir, we'll make it commencement of the year.
I think this maybe ICA thought this is 2021. I think.
Sir.
But here, wait. Sorry, I'm sorry. ICA is right. We are having 31st March 2020. This is not financial year. This is next financial year, first quarter. I'm sorry. It is my mistake. 31st March 2020 is the balance sheet date. So here also it is April 2020 only. Here also it is April 2020 only. Here also it is April 2020 only. It is not commencement. It is after the end. Guys, is this clear now? Vrinda, is this clear now? Our balance sheet date is 31st March 2020. So this is event after the balance sheet date only.
Yes, sir.
Adjusting or non-adjusting?
Adjusting.
Think again and tell me. Guys, do you think this is adjusting or non-adjusting? It should be non-adjusting because on the date of balance sheet, there is no condition existing. When it is adjusting event, tell me. If it is giving you an additional evidence of a condition existing on the balance sheet date. So if court case is already existing before 31st March and judgment came on 10th April, then it will be adjusting event. This should be non-adjusting event. Let us see how ICA has given the answers. How many folds will be there in questions, and the student will have already pav kilo brain. With that pav kilo brain, you need to answer. How, madam? How? Vrinda, read this. In first para, they have given what is adjusting event, what is non-adjusting event, what is events occurring after balance sheet date. Read question number 1, ma.
Sir, third point or
first point?
Since on 31st March 2020, T Limited was expecting a heavy decline in the demand of the stitching machine. Therefore, decline in the value during April 2020 will be considered as an adjusting event. Hence, T Limited needs to adjust the amounts recognized in its financial statements with respect to net realizable value at the end of the reporting period. Accordingly, inventory should be written down to rupees. Total value of inventory in the books will be 50 machines into 4,000, which is equal to 2 lakhs.
Guys, do you, all of you understand this? All of you, please respond. Do you understand this first part of AS4? If yes, type done in the chat box. Then I will move. Very good. Very good. So, about fire accident. Read the second point, ma, Vrinda.
A fire took place after the balance sheet date, that is during 2020-2021 financial year. Hence, the financial statements for the year 2019-20 should not be adjusted for loss occurred due to fire.
Full stop. So, fire accident occurred in 2021 financial year, so it will be recorded in 2021 financial year only. Okay, it is not an adjusting event, it is a non-adjusting event. I will not go back and change my financials on the balance sheet date, point number one. But guys, do you remember there is an exception to this? Do you remember there is an exception to this? And the exception is, if the going concern is violated, then you will treat this as adjusting event, point number one. Point number two, if you consider that the loss is material, then you have to disclose this in notes to accounts. And another important thing is disclosure in notes to accounts is there, no? Previously, it is a disclosure in board of directors report. Now it is a disclosure in financial statements, notes to accounts. Okay, now what they are saying is, however, in this circumstance, the going concern assumption will be evaluated. In case the going concern assumption is considered to be appropriate, even after the fire accident, no disclosure of the same is required in financial statements. So there are three aspects in this. One, it is a non-adjusting event. Two, going concern assumption is not violated. Three, based on the materiality, you decide whether it should be disclosed in the financial statements or no. That's all. You understand? So now no board report disclosure for non-adjusting events. Sandeep, if anything is a non-adjusting event, which you consider to be very important, significant, material, which affects the economic decisions of users of financial statements, then you have to disclose that in notes to financial statements now, not in board report. So notes to financial statements is the amendment. Okay, it came from actually IFRS to Ind AS. We are following that in accounting standard also. Okay, there is no written authority for this, but we have to do this. In ICA study material also, they changed the answers. Okay, now read the third one. What is the third one? Advertisement, court case on 10th April, that one. So Vrinda, read third point, ma.
The contingency is restricted to conditions existing at the balance sheet date. However, in the given case, suit was filed against the company's advertisement by a party on 10th April for amount of rupees 20 lakhs. Therefore, it does not fit into the definition of a contingency and hence it is a non-existing event.
So first they are saying, is it a contingent event? That is one question mark. Question mark two is it an adjusting event or non-adjusting event? So basically it is a non-adjusting event. Okay, why? Because the court case is filed after the balance sheet date, so it is a non-adjusting event. Okay, if the court case is filed, imagine before the balance sheet date, say for example 15th February. So 1.5 months before the balance sheet date, then you will think the probability of occurrence. If it is more likely than not, then you will create a provision. If it is not more likely than not, that means less than 50% of probability, then you will say it is a contingent liability. That also they included, because previously AS4 and AS29 were same. So what is the heading of AS4? Contingencies and events occurring after balance sheet date. But now actually for contingencies there is AS29. For events after balance sheet date there is AS4. But the answer they have given both put together. But as a student, you don't need to really discuss about the contingency. If you write the court case is filed on 10th April, there is no existing condition on the balance sheet date relating to which further evidence is received. Therefore, this should be treated as non-adjusting event. Enough. You understand? If you can write about contingency, that will be good only. But basically, this is what it is. So guys, are we done with accounting standard 4? Hello. So Sandeep, read accounting standard 5. Next one. Question number 13. Wait, question number 13. A is there. Then B is there. Construction contracts. Okay. We'll do both. Sandeep, read question number 13A.
Accountant of Mobile Limited has sought your opinion with relevant reasons whether the following transaction will be treated as change in accounting policy or not for the year ended 31st March 2021. Please advise him the following situation in accordance with the provisions of relevant accounting standard. Provision for doubtful debts was created at 2% till 31st March 2020. From the financial year 2020-2021, the rate of provision has been changed to 3%.
So you used to create provision for bad debts at 2% till last year. Current year onwards, you changed it to 3%. So is it a change in accounting policy?
No.
What is this?
It's a change in accounting estimate.
Excellent. Correct. Second point.
During the year ended 31st March 2021, the management has introduced a formal gratuity scheme in place of ad hoc ex gratia payments to employees on retirement.
Excellent. Is it a change in accounting policy?
No, sir.
No change. Very good. Because this is expressly, clearly, explicitly given in the accounting standard itself. They have given an example. If a company is introducing a formal gratuity scheme where existing, policy is to pay ex gratia, ad hoc payments, it is not a change in accounting policy. So this is not a change in accounting policy. Okay. Then next one, 3.
Till the previous year, the furniture was depreciated on straight line basis over a period of 5 years. From current year, the useful life of furniture has been changed to 3 years.
Till the previous year, the furniture was depreciated on straight line basis over a period of 5 years. Okay, from current year, the useful life of furniture has been changed to 3 years. So is this a change in accounting policy or change in accounting estimate, or what it is? Guys, all of you.
Change in accounting estimate itself.
Is it a change in accounting policy or is it a change in accounting estimate?
Sir, estimate.
Let us see. Others. Hello. Remaining people respond. Correct. All of you, only few are responding. Correct. Very good. It is a change in accounting estimate, not accounting policy. Okay. Read fourth one.
Management decided to pay pension to those employees who have retired after completing 5 years of service in the organization. Such employees will get pension of rupees 20,000 per month. Earlier, there was no such scheme of pension in the organization.
Important. So tell me, is there any change in accounting policy?
No.
No. This also clearly given. Those events which have not occurred earlier, or where there is no formal policy earlier, if you are introducing something new, that is not any change in accounting policy. So this is not a change in accounting policy. Next, read fifth one.
During the year ended 31st March 2021, there was a change in cost formula in measuring the cost of inventories.
Star mark. Put a star mark. What is cost formula? Right.
Sir, the formula for the valuation of inventories.
What is that formula? Cost formula. Give examples.
Sir, is it FIFO, LIFO?
Yes. FIFO, LIFO, weighted average method. These are cost formulas. Standard cost method. So you are changing from FIFO to weighted average method or weighted average method to FIFO. Is it a change in accounting policy?
Yes, sir.
Obviously, yes. Okay. So 1, no. 2, no. 3, no. 4, no. I think only fifth one is a change in accounting policy. Correct?
Yes, sir.
Okay. Let us see the answer. 1. Underline change in accounting estimate and is not a change in accounting policy. If you are increasing the rate of provision from 2 to 3, it is a change in accounting estimate, but not change in accounting policy. Second one, adoption of accounting policy for events or transactions that differ in substance from previous. This is the theory which you read in accounting standard. Now, introduction of a formal retirement gratuity scheme by an employer in the place of ad hoc ex gratia payments will not be treated as a change in accounting policy. We have discussed. 3, change in useful life. It is not a change in accounting policy. It is a change in accounting estimate. 4, adoption of new accounting policy is not a change in accounting policy. 5, this is change in accounting policy. Change in cost formula is a change in accounting policy. So 1, 2, 3, 4, no. 5, yes. Hello guys, you understand this? All of you say yes, then we'll go to next point. Okay, so Sandeep, read accounting standard 7, question number 13B in RTP.
B Limited undertook a construction contract for rupees 50 crores in April 2020. The cost of construction was initially estimated at rupees 35 crores. The contract is to be completed in 3 years. While executing the contract, the company estimated that the cost of completion of the contract would be 53 crores.
Super.
Can the company provide for expected loss in the financial statements for the year ended 31st March 2021? Explain.
Bolo, you tell me.
Yes, sir. Yes.
Hello, all of you in the chat box, please let me know. What is the answer for this? Do we need to recognize that 3 crore rupees of loss? What if the percentage completion is only 10%? Remaining 90% of contract will be done in the later years. Only 10% of contract is done in the current year. Or what if the contract is not yet started? Or what if I earn profit from other contracts? The standard is very clear. The standard is very clear. If a contract gives you a total net loss, that means considering the whole contract, not current year, the loss should be recognized immediately, irrespective of degree of completion. 2, even if the construction has not yet started execution. 3, even if you earn profits from the other contracts, still this 3 crores should be charged. The loss should be recognized. Understand? So read this 13B answer, ma.
As per para 35 of AS7 construction contracts, when it is probable that the total contract costs will exceed total contract revenue, the expected loss should be recognized as an expense immediately. Therefore, the foreseeable loss of rupees 3 crores, 53 crores less 50 crores, should be recognized as an expense immediately in the year ended 31st March 2021.
Guys, trust me, 90% of students will not write this part of the answer. This first part of the answer is LKG, okay? First part of the answer is LKG. Even when I asked this question in the chat box, everybody said 3 crores loss to be recognized. That is common sense. That is your knowledge in accounting. But only those students who have thoroughly read and understood the accounting standard will write this part. And trust me, if you write this part for 4 marks, ICA will give you only 1.5 or 2 marks. This is more important. So when I am explaining the answer itself, I told you these 3 points. Work, whether the work has not been commenced or whether the work is commenced. Point number 1. What is the stage of completion of this contract? Point number 2. Point number 3. Profits expected to arise on other contracts. These 3, if you write, then only you will get full marks. Many students will not write this. Okay, Sandeep, read that.
The amount of loss is determined irrespective of whether or not the work has commenced on the contract, the stage of completion of contract activity, or the amount of profits expected to arise on other contracts which are not treated as a single construction contract in accordance with provisions of AS7.
So we are done with equity shares with the differential voting rights in this session. we have done with accounting standard 4, we are done with accounting standard 5, and we are done with accounting standard 7. In all these things, whatever we have discussed till now, do you have any doubts? Ask me. If you do not have doubts, then we'll go to next standard.